Thank you for joining us today. I'm very excited about the topic. Real quick introduction, I'm Scott Robinson, the founder of Plug and Play's FinTech initiative. We have roughly 5 or 6 large facilities throughout the world, in Paris, Tokyo, Abu Dhabi. And of course, we've been investing for the past 15 to 20 years in FinTech. Notably, we are here now to talk about the future of enabling. So I'd like to ask my panelists to quickly introduce yourselves, please.
I'm Joanne Barefoot. I am CEO of Barefoot Innovation Group. I'm co-founder of Hummingbird RegTech, which is an AML solution. And I am, as is Smita, I'm affiliated with the Omidyar network. I'm a senior advisor to Omidyar, and I'm a former bank regulator.
My name is Martin. I'm a CEO of Silent8, and we help banks combat money laundering and terrorism financing. And we help like a really big and really cool banks to do that. You know who you are. Standard Chartered, OCBC, and others. Like, really love you guys. Thank you.
Hi, everyone. I'm Smita from Omidyar Network. Omidyar Network is a global venture capital firm which is focused on fintech investments. We actually take a sector change view to our investment thesis. We believe that there's a huge opportunity for technology to disrupt the way financial services are used and consumed across the world by the most underserved. And so a large part of our work is to back entrepreneurs with innovative ideas that actually push the envelope in making financial services more relevant to people. In addition, we also work in creating an ecosystem that is supportive of that innovation, which means we work with incumbent banks, we work with policymakers, and we work with regulators.
Hi, my name is Arvind Sankaran. I'm a venture partner at Jungle Ventures. So we help founders like Martin really achieve the fullest potential of the wonderful things that they're doing. Jungle Ventures is a homegrown VC firm out of Singapore. We focus on Southeast Asia and India. We look at consumer internet plays and technologies that are serving the small and medium businesses around Asia. We have our strategic LPs as EDB, Temasek, and IFC, and we are fortunate to have advisors like Ratan Tata on our board. Pleasure to be here.
Thank you very much. So you can see the questions that we'd like to address today. I think the first major question we want to talk about is, who are these enablers? What are they? So to the panelists, who are these folks that are helping us move FinTech?
Okay, I can take a shot at that. Just to kind of set some context, I think what is being seen is started several years ago. I would think back when the immediate aftermath of the GFC, I think a couple of things became fairly evident to banks. One was, of course, the risk side of the whole business had needed to be managed, and therefore the amount of architecture and resources that had to go into risk was such that it began occupying enormous amount of management bandwidth as well as expense. I think by some accounts, compliance accounts for up to 15% of the OPEX in some of the banks, whereas it used to be less than half of that pre-GFC. So one was the risk part of it that became, came to front and center. The other was the decline in return on equity from the typical, high double-digit promises that were made by several CEOs pre-GFC. On account of several factors, the return on equity, now that we're looking from the banking categories in the single digits, and therefore that put a lot of pressure on banks to look at their own platforms, and the transformation agenda, I think, began right there. At the same time, externally, I think there's been e-commerce and social that kind of began applying a lot of pressure on banks to change, because the tech companies that had come in had begun changing the whole engagement model with customers. So I think going forward, the enablers for the future operational model of banks will need necessarily to involve external innovators as well as internal change in the way banks approach their businesses and their delivery. So we're going to see a combination of the two play out.
Sure. Smita?
So I think there are a few things that are changing in banking. Number one, banking is getting unbundled and rebundled, if I may use that word. You do not necessarily need to be a licensed bank to offer banking services. Banking services could be embedded in a business software. It could be offered by a tech platform. It could be part of a chat group that you are in. So you could actually be finding financial services as a tool embedded in different forms and shapes, and which also means that the providers could be coming in different forms and shapes. I think the second big change that we are seeing is, while the access is available of financial services, ubiquitously almost now, but what's the relevance and what's the usage and what's the contextualization of those financial services for the consumer? I think that's going to be more and more critical in defining the business model. So I think consumer centricity, in understanding the context of the consumer and in tailoring your solutions to meet a particular need, is going to be more and more relevant, and which means that you could actually have a different set of people that are dealing with the front end, last mile access and engagement and personalization with the consumer, and you could have a completely different set of people who are working on the compliance, risk management, so we're really, and that's really what I meant by, unbundling and rebundling. And, the third thing as a result of this is we are talking about an interconnected ecosystem where we are having potentially number of players that are interdependent. You could be having a bank, a licensed bank that is working with a tech platform who's the distribution partner. You could be having a fintech startup that's helping with compliance for a bank. So you are then talking about a large interconnected ecosystem of different players focusing on various niche areas.
So to kind of bucket this, we've heard internal risk solutions, certainly a perspective that's needed to enable this engagement. Second, of course, the unbundling of the bank. So this means the granularity of services and channels have shifted. We're watching this right now with GDPR and PSD2 in Europe. But I'd love to hear from you, Martin, if you could kind of explain, how does that really flow for your perspective and the startup perspective?
Well, I don't know if you can tell this, but I wasn't born here. And I was born in Europe, in Poland. I grew up there. That's where I got all my experience. And back like 4 years ago, we had to make a decision. We wanted to start this company and to solve this problem, but we said, okay, we can't do this from Poland. Like when the big financial institutions are thinking about how to deal with preventing laundering money, they want to do this across the board in a consistent way. They want to make sure that even if it's a US-based financial institution, Singapore-based, they just want to make sure that everywhere that they're present, they're protected. So we said, in Poland, we really just deal with branches from the global corporations. There's no actually like a decision-making power there. So we said we have to move to some place. And we look at this like an enablers problem. We said, okay, what would be the best place for us to start? Like where our odds are the biggest. And we looked purely on the ecosystem. So we looked at New York, London, Singapore, Hong Kong, all these places. And we said, okay, what's important for us? What's important for us? Access to capital. And not necessarily how much capital is there to be accessed, like how much capital there is in the volume. Like obviously in Silicon Valley there's the most. But then we thought, okay, what are our odds of attracting this capital when we're doing good things? I say, okay, here in Singapore, when this venture capital market, like you raised your fund not that long ago. It's not that you're doing this for the past 100 years. Like it's something that the latest of your funds is a pretty fresh thing. So, and the same, all the big VCs in Singapore raised their biggest funds in the last 3 years, maybe. So we looked at, okay, this is the place that on this angle, this part of ecosystem is emerging. We thought it's a great financial center. So we looked at all these things. It's like, okay, we just scored them. Singapore won. And for us, it was a no-brainer. Like the best ecosystem is the place that we should just move to and start from. Now we're working with global financial institutions, but because we started in a place that obviously regulator, like what are the regulatory, what regulators are thinking about innovation, how they're okay with implementing innovation in financial institutions, all these things. We had a long list, and for us, the higher the place scored on the list, this was our choice.
And that's a great segue. You have such an eclectic background. I was going to say, what is the state of the market that you see now? And as we kind of transition from your RegTech paradigm, what does that mean for us as an enabling group?
So I agree with everything that's been said, and I want to piggyback on what Martin said first on regulation, because I think that the biggest potential disabler of innovation in banking is going to be if we get the regulation wrong. I say that as a former bank regulator. I'm not critical of the regulators. They have a hard job. I think they have the hardest to do. But one thing I want to suggest as a message today is everyone in this room, everyone in this building needs to take on the issue of helping us modernize the regulatory framework and really transform it into a digitally native approach so that it can keep up with the change that's underway, all the great ideas that are here, all the energy that's here. In terms of the impact on the market, as Smita talked about consumer finance. Innovators are attacking every single thing that causes people problems in their financial lives, other than lack of money. So, lack of understanding, the complexity of the products, the difficulty of accessing the products, the expense of the products, the ability to pass the risk screens, on and on and on. All of this is completely transforming consumer finance. And then, in my view, the whole system is also shifting over onto a platform basis from a rigid enterprise basis into a much more collaborative and platform basis, and the enablers are driving that.
And from our experience at Plug and Play, having worked with the Monetary Authority here, I have to say, watching the API standards as they were listed years ago, and now seeing that fulfilled with an exchange wherein you have, quite an interesting sandbox environment. So to that end, as an entrepreneur, Martin, how does this feel in checking the box? And certainly Singapore is one of the trailblazers in this world. Where else do you see this kind of happening?
So I think that no other place in the world have such a progressive, a good regulator for the financial market. And what was super surprising for me, the moment that we started expanding from Singapore, we went to London, we went to New York, we started working with financial institutions there. They said, banks that are monitored, regulated by MAS, and MAS is okay with this, it means that you have to do some good things.
Right.
I was like, whoa, what is street credit? Just because we entered from Singapore, working with local banks here, or banks like Standard Chartered, and that are being regulated by MAS, and just that already for others was it means it's a good thing. So it's not only that it's a regulator that's very easy to work with, but actually outside of Singapore, it's very, very well perceived by others. So for me, it's okay, I didn't know this when I was creating this table, but if I knew this would be a massive tick.
And certainly, from the investor perspective, as well as the banking perspective, having a checkbox next to you're basically standardized within the MAS forum, or at least engaging with those constituents. What is your thoughts, and what does that mean for kind of the next phase of investment that may be outside of a place like Singapore?
Yeah, I could take this. So if you look at the evolution of the market, and to your question on the market infrastructure, so you have the innovators, you have the incumbents, and you have the institutions. And the institutions are essentially the regulatory institutions or the agencies that are involved in developing the ecosystem. And if you look at the way this whole space has evolved over time, in some jurisdictions, it's been the institutions that have led the change in market infrastructure. In others, it's been the innovators who have led the change. I think clearly in Singapore, I think we do see the regulator taking a very strong lead in being able to facilitate the infrastructure through consultations and really driving the agenda. At the same time, we do see jurisdictions like India, where I think they have built the market infrastructure, they've built the stack, they've built the payment rails. So we are beginning to see that trickle up, from the more developing markets into the developed markets in terms of getting the market infrastructure all sorted out. If we look at institutions, I think what I do see is, I know that a few years ago, there was an accelerator program in one of the large banks here, and the way that startups were selected was that whether their solution could integrate with the enterprise architecture or not. That was the filter. And that filter was a pretty tough filter because legacy core banking systems did not talk well to many of these new tech platforms. So a lot of them dropped off because of that constraint. But I think in more recent years, we are seeing the infrastructure completely change, with the expansion of open banking here, with the build-up of teams within institutions now who have data scientists and developers sitting in-house who are able to work with these external innovators. I think that has changed the conversation completely. So we are seeing better commercial outcomes, we're seeing better collaboration. So I think it's a good place and direction we are going to in terms of the infrastructure.
And you touched on, I think, a really important topic, the stack. India certainly sets itself apart, so perhaps you could touch on that, Smita.
Yeah, so we heard Prime Minister Modi this morning talk about what all has happened in India, and it's really interesting as to if you see the overall at the broadest level, if you're talking about the adoption of digital financial services, I think there are three important pillars for that to happen. The first is the basic infrastructure for internet access and usage and mobile penetration. The second piece would be the technology stack that has been created in India, which is the foundation of which is Aadhaar, the biometric national ID that more than a billion people in India have. There's 92% coverage of Aadhaar in India now. And then on top of that Aadhaar, you actually have multiple technology platforms for specific use cases that have been built as an open platform for anybody to use. So you have an eKYC layer, you have an e-sign layer, which actually allows you to digitally sign a legal document that has legal backing. You have a DigiLocker, and then there is the entire cashless layer, which actually allows for anyone to anyone and one-to-many payments in real time on a completely interoperable basis. And then the last layer on top is the consent and the privacy layer, which we all recognize is increasingly important going forward. So that's the second piece of having this technology stack as an open platform that allows anybody to kind of plug and play and get ready to use any of these use cases. The third piece, I think, which is equally important, is the policy and the regulatory stance that is supportive of the innovation that's happening. So in India, the first piece on the internet and data technology, India today has the lowest data costs in the world and the highest consumption of data. It has more smartphone users than in US. The growth rate of smartphones is the highest in India. So it's kind of on a completely unprecedented growth trajectory. And I think a large part of that has to do with this public good infrastructure that has been created by the government, which actually brings down the cost to serve and the cost to access significantly. So if you're a new fintech, you're a new bank, you can plug and play into this, and you're ready and you have almost all the use cases as any other bank who may be in business for the last 50 years. And so that cuts down your capital expenditure significantly. It allows you to start focusing on businesses which are, because your cost of transaction is low, you can now tailor products which are smaller value products, which cater to customers with lower income. Because a large part of the constraints that we see from the banks, minimum transaction size, don't do so more than 5 transactions on an ATM, keep a minimum balance in your savings account. It's all cost management techniques by the banks. And as soon as you have your operating costs coming down because of your open architecture, you are okay for the customer to do hundreds of 10-cent transactions because it's not costing you that much to actually enable it. And that completely redefines the user base you are now catering to. And that then in turn results in a virtuous cycle of adoption which gets you scale.
Well, and I think it's fairly clear, all this enablement basically comes back to the consumer, right? The value and the features from all of these solutions ultimately is to benefit the consumer. So I guess, one big question we might have, what does this mean for the consumer in the next 5 to 10 years, we can expect most folks will be on a mobile device doing most of their banking services.
We're in the process of reaching every consumer in the world through the mobile phone with financial services. The World Bank has had a goal of 100% banking access for everyone by 2020, and we're not going to hit that, but we'll hit it in the 2020s. Then you have a whole lot of other issues behind that on whether people use those accounts, whether they can be exploited, how they can protect themselves. I mentioned the Omidyar network. They have funded a project called the RegTech for Regulators Accelerator, or R2A. And one of the things it's done is help regulators build a chat bot on the phone so that people can complain if they've been the victim of a scam, and it can go straight to the regulator, and the regulator can analyze that information. So in other words, the opportunity and vulnerability of consumers is rising at the same time.
Right.
And that's where, partly where the regulatory piece comes in, is that we have to protect people. There is a global movement toward regulatory modernization, and MAS is at the forefront.
So I would love to make sure we impart best practices to the audience. So maybe Arvind, you can touch on your experiences in the past and what you're looking for as an investor, both with the corporate perspective. That would be really helpful to kind of understand what is it that really sticks out for you now that you have taken on the fintech investment hat.
Yeah, what we see in the landscape is an interesting kind of evolution of the banking models. So one is, of course, the mobile-only model, which some players are beginning to develop, and we are watching closely the Hong Kong, kind of play out next year with the virtual bank licenses being granted sometime in first quarter next year, I believe. We will see some mobile-only, models being put out there, and then you have the mobile-first, where banks are trying to get customers to migrate to mobile and yet offer omni-channel kind of an experience. And then you have the bricks and clicks, which are still, it harks back to the probably 10 years ago when you still had the physical channel as important as the web-based channels. And then you have the bricks only. And interestingly, in the United States at the moment, the branches, the new branch growth is still carrying on even as we speak today. They're expecting to see that plateau only sometime in 2019, where new branches will not be built anymore. So I think all these four models are going to kind of exist in different parts of the world. I think in what we see in ASEAN is the emergence of digital, given that the smartphone has become affordable and accessible. So as we evaluate companies for investment, what we do look for is what kind of pain point are they solving for either entrepreneur or for a consumer. And when we look at the small and medium businesses, which is emerging as a very strong creator of wealth in Southeast Asia, and typically small medium businesses have accounted for as much as 2/3 of the GDP of many of the countries in this part of the world, we are seeing the emergence of an appetite to digitize their solutions on the back of new technologies. So we're seeing very interesting supply chain finance solutions emerge. We're looking at very interesting billing point-of-sale solutions that are enabling grocery stores to improve their store operations. We're seeing very interesting consumer checkout plays that are positioning themselves digitally in e-commerce platforms and providing for that seamless solution of credit. So as we look at the investment landscape, we are seeing many of these emerge as very interesting ideas for us to look at.
Any other best practices you'd like to share?
If I may add on the, I think one of the things that we are excited to see is better user experience at the front end. traditionally banking and financial services has been a very complex subject, and one is expected to have a higher order skill to be able to do anything to do with banking, insurance, financial services. So there is kind of a wall of sorts that a lay consumer has with the bank, and I think that is definitely changing, and we are already seeing a much more seamless, personalized, in the context user experience that actually at the front end is very intuitive, very simple, with a lot of not just the convenience of it all being on your mobile, but in terms of intuitiveness of what you're supposed to do, the questions you're supposed to ask, and how you can actually seamlessly make a payment or make buy an insurance without actually being very bureaucratic about how it's done. But at the back end, it also then can have the power of deep analytics and machine learning that is actually powering that entire experience to give you the best of the knowledge that serves the consumer's interests. So, and that actually is now, in a way, you can actually do hyper-personalization at a cost that is actually effective. And you don't need to now have wealth managers only for your high net worth individuals. You can virtually have a chatbot-powered wealth manager centrally working individually for every single customer and offering a very seamless experience at the front end.
So I just wanted to jump in and, like you said, give more also love to the backend, because how this backend performing impacts a user experience later on. So, I don't know if you guys know this, that the bank, for example, bank don't want to deal with terrorists. They don't want to open accounts for terrorists. The bank, even if you're not a terrorist and you're sending money to Kim Jong-un in North Korea, the bank don't want to really execute this transfer. They want to stop it before you actually do it. So even if you can do it on the mobile using your face, finger, and left leg, the bank wants to have a backend there to say, stop, this is not going out. We're not the bank who's financing evil regimes or something like this. And when you receive a bribe for something, this bank wants to look at your account and say, oh, I need to notify authorities that you just took a bribe. So there's a lot of things in a backend that's not super sexy, that's not really about user experience, but just the fact that they all want and need to do this impacts a user experience at the end. Really, it should be very easy to open a bank account if you forget about it right away. Why don't we open an anonymous bank account and let's run with it? This already happened a long time ago. And this is how a lot of money been laundered. You never knew who's sending money to who. A lot of evil stuff got financed this way. So that's why all these regulations, all this effort come to the backend, and solving these backend problems creates a better user experience at the end. So it's like you said, it's both ways. So it's front end, and this backend needs to work super smooth, so that at the end, user is really happy with the service that he's getting, and bank is making money.
Yeah, the anti-money laundering is a great example. The UN estimates there's $2 trillion a year being laundered, and that we're catching less than 1% of it. And the reason for that is that we have old regulations and old technology. We have the technology to do better. What we don't have is the institutional readiness. I think the heart of the best practice challenge is that the whole system was designed in the analog era on paper. All the products, all the processes were originally on paper. Over the years, we've brought a layer of automation over them so that they speed up. What we have to do now is convert the whole thing to a digital design, digitally native, start fresh. Don't just take your old thing and graft some technology onto it, but deeply rethink it. One best practice is to plant your innovation next to your legacy processes and let it start to grow up in a new channel instead of trying to force the old channel to change. The most difficult part of this is the cultural and systemic change that people face. And I'm not one who thinks banks are going to disappear or that fintechs are going to kill them off, but I think banking, our panel is talking about the future of banking. It's going to be profoundly different, and And companies that can't make that jump and can't move to a platform basis and get away from, and can't move into the cloud and get away from their old on-premises IT, all of this, they won't be able to compete. It's a bigger change than it feels like.
I'd like to build upon what Joanne just mentioned about legacy systems and the need to convert. If we take IT spend as a percentage of revenues, the financial services category actually spends the most across all industry groups. And we're talking about a median spend of about 8 to 9% of revenue as IT spend. And if you take the best-in-class banks, they're spending probably north of 20% of revenues on IT. And if you look at what has happened in the past, the core banking systems have taken up most of the budgets for that. And so therefore you have 70% of the budgets going into pretty much maintenance and a little bit of tweaks here and there. 30% is available for new product development, but often that gets used up in addressing regulatory priorities which bubble up to the top of the queue. But I think in recent years that whole mix is changing, because the first place that banks are going to attack are the core banking platforms. And if you look at percentage of digital as a spend of total IT, now we're looking at some banks spending as much as 30, 40, 50% of their IT budgets on digital. So that, I think, is changing the entire setup, and therefore announcements like DBS going with Gojek and UOB going with Grab. I think at the back end, to Martin's point, there is a back end involved, and the back end is changing significantly, transformationally, for these players to actually be able to talk to each other at the back end and create those seamless delivery of products and services at the point where the consumer wants them to be delivered.
And unfortunately for this transformation, it's from the moment that we were designing our product early on, we just had to understand that there's like a tons of stakeholders involved. Like, it's not just system program and it works in our sandbox and this is going to be a solution that all banks going to adapt and it's just going to roll out smoothly. We just knew we have different regulators, tons of internal and external stakeholders. So to make a change in such a big institution that's governed by multiple processes and oversight and regulations, to change in some direction, you have to already from the design moment think about what type of environment you're going to step into. And you have to be ready that when you step into this environment, none of these roadblocks will going to permanently stop you. You have to have answer to all of them, and then you can move through. And you can achieve spectacular results. And a lot of banks right now who are investing a lot of money in technology, for me, it's like the smartest thing to do. Like, how else do you want to move to the future if not investing in technology? Like, you want to hire 50,000 more people doing some manual, like a copy-pasting work?
Well, and I think that's such an important part, but at the same time, there's certainly challenges. So for example, we watched what happened with the Apache Struts and Equifax back in the States and what that might mean for privacy information. So what are some of the challenges that you expect with this fast-moving pace of new technology being brought, or even the concept of a challenger bank?
Some of you may have seen a picture online a couple of months ago that showed a boy sitting at a computer and Mark Zuckerberg was looking over his shoulder. And the boy is saying, my dad says you're spying on us. And Mark Zuckerberg says, he's not your dad. I think the privacy issue is huge. And one of the best practices is that because technology, if we were graphing the exponential curve of technology, we've entered into that straight vertical part of the hockey stick. We're still using linear institutions and brains to try to deal with it, and that gap is widening. And one of the best practices is going to be positioned where you're trying to do the right thing, you're doing things that you can defend even if they're not being forced upon you, because the risk is huge as people realize how technology is transforming their lives. I'm a technophile. I think technology is going to make things better than they've ever been before, but there's so much risk and dislocation in it, and people are going to there will be backlash. So being ready to be proud of what you're doing is one of the keys to the whole thing.
I think there's one thing that is emerging for banks as they look at their P&Ls is that given that on the revenue side, over the last few years, there have been pressures on margins, etc. In the pre-GFC era, I'm using GFC as a kind of a marker in many ways, I think the margins still allowed, return on equity still allowed for customer portfolios to remain, significant portions of it to remain inactive or not fully engaged with the proposition. But that has changed now. There is a need for banks to be able to work the customer base in terms of raising activation, in terms of raising engagement, in terms of raising repeat visits, repeat purchase frequencies, etc. If that needs to be done, then you have to start using data in a very different way than before. And I think that's where things are changing very dramatically across the board, whether it is contextual engines that are now helping banks to be able to deliver highly personalized campaign offers at the moment, at a transit moment, or at a shopping moment, or at a travel moment. I think is becoming more possible due to these enablers. And I think that's where we're going to see more and more of banking getting delivered, not in branches and behind teller counters and in the vaults, but actually through data, algorithms, and devices.
Could
I
just-
think I'd like to, sorry.
Go ahead.
I just want to add in terms of, you asked about the challenges, and I
Yes.
think, so we are seeing the whole fintech thing started off with two different worlds of sorts. You had the very nimble, agile, young startups, who are like completely, on top of getting something ready and up, and at the bleeding edge of innovation. And then you have the large incumbent regulated entities, banks who've been, who have their own ways of working and processes to follow and paperwork to go through. And it's a marriage of sorts that we are now seeing between the two worlds, which is great. And I think the future is for the two to work together. But it's also equally important that as we see a closer integration and closer interaction, we do not miss out on that creative streak that we see in the startups. We do not miss out on the agility and the nimbleness that they bring, which is what makes them what they are. And we do not miss out on the consumer centricity. What does the consumer finally want, and what are we solving for? I think that's going to be the biggest challenge, that we keep, we kind of make sure that we are, taking the best of both worlds.
So on that note, kind of a Debbie Downer question. We have seen the rise of fintech since roughly 2008, 2009, post largely a fairly large crises. We haven't really experienced that yet. What can we equip the audience as far as strategies to maintain that ethos of the quick iterative process and the innovation that would be required? Because from our experience, typically that's often the spend that goes away very quickly in a down market. So any thoughts that you might impart to the audience of what happens when the market doesn't do so well?
Well, we started Silent 8 after the financial crisis, so I don't know how we're going to react to the next one that will probably come. But I honestly, no matter what the issues are, I actually like that everything around us is going better and faster. I like that it's happening faster. It's we obviously, I was talking about these stakeholders, people in charge of policies, privacy, and making sure that all the regulators introducing new laws that make sure that everyone is maintaining our privacy where we want it. These are the stakeholders around you that you can't do anything that you like. You're kind of bound, but you can still move very fast forward. I won't give there's a good story about the central bank in Bangladesh that got robbed.
Yes.
And the cool part about this story is that they were trying to steal $1 billion. They managed to steal only 80 million just because the rest,
There was
over
a misspelled
900,
word, right?
and it was
a typo.
stopped. The transfer was stopped for investigation, but for a wrong reason. If this would be fully automated, the whole $1 billion will go through. So you see here that lack of automation gave time for authorities to catch up with the crime and stop it. But it's like an argument that's saying, before we had cars and planes, when you robbed the bank and you were on your horse, you couldn't get far. But I kind of like the world with planes and cars. I just want like a law enforcement to also have planes and cars and run after these guys. So I like the comfort that this direction brings me as a consumer, like and a normal, like a human being living here in Singapore, enjoying life.
So we have a few questions from the audience. First question's from John. In the future, will big tech or even traditional companies replace existing banks and financial institutions as we move towards a more accepted financial tech ecosystem?
I think they won't replace banks, but they will deeply, profoundly change banks. I do think we'll see big tech come into what we think of as banking. They're already in a lot of, they already offer pretty much some version of most of the services that banks offer, and that's likely to grow if they want it to grow. If they decide they don't want to step into the full regulatory regime, some of them will probably hold back. But the banks are not going to, they're going to be competing through platforms, as we said before. So it's not going to be, is it a new fintech against an old bank? It's going to be, are you putting together a suite of services, and are you delivering it with the UX and the voice interface and all that people really want? And big tech is going to be really good at that.
I think, Mr. Bill Gates said two different things at different points in time. So he did say that in the future we'll see, we may not see banks, but we will need banking. That was a famous quote he made. He also said that we tend to overestimate the impact of things in the next 2 years and underestimate the impact of things in the next 10 years. Right. So if you put these two things together and try and read between the tea leaves, I think it's what we're seeing now is really the interplay in the marketplace between the so-called tech fin and then the fintechs collaborating with the incumbents to be able to counter that kind of competition. So my own sense, and I'm maybe putting myself out here, is I don't see a point where the big tech will kind of completely be able to capture the market. I think we will see certain domains and certain profit pools and certain simpler product lines where there is a great need to be to contextualize your service, and also that the entry barriers are lower, etc. I think maybe we'll see some of that market share go away. But for most part, I think where I'm seeing this going is the collaboration between the fintechs and the incumbents actually is resulting in new operating models for banks. And I think that's going to really change how banks look like in the future. And I think even if we look at the incremental transfer of profit pools and revenue pools between banks and new tech players, we're talking about literally in a percentage point or 2 percentage points over the last few years. So we're not seeing any radical shift, but I think it would be unwise to not look at what the big tech are doing, because if you take a simple case of a credit card product, for example, the credit card product is a consumption product. So the consumer goes through discovery, goes through choice making, goes through a selection, and then goes through fulfillment. And the credit card appears only at the end of that consumption cycle as the payment product. Banks typically have seen only the transaction pop into their systems, which is literally at the end of that. The big tech companies and the platform players have data on all the previous stages, the discovery, the selection, the actual ordering. So there's a hypothesis that the platform players have 90% of the data that's relevant, and the banks are carrying 10% of the data, which is just the post facto transaction. But I think that is changing with what we just spoke about, the collaboration and the ability now to extend banking into the consumer's context. So I think we will see a different market, but I don't know if it will be as extreme as one taking over.
Can I just say, something to remember is that this technology revolution is converging with the demographic revolution underway. Yes. And the millennials are the largest generation in the history of the world. When I speak to banker audiences, I say, if your baby boomer customers love what you do and millennials not so much, you have a problem. And any business model that's still based on, as you said, branching and bricks and mortar and all of it, the big tech companies are going to have an advantage.
Oh, I dodged the bullet because I have no idea. Oh, thank God.
So the next question, how do you see the end consumer directly participating in and shaping the fintech solution?
I think, if I could take that, I think, increasingly it's actually going to be more power to the consumer because data and technology is going to be ubiquitously available. What is going to be really differentiating between the providers is that they're going to be competing for consumers' trust. And that is actually going to be a function of how engaging are you, how contextual are you, how are you actually solving the real problem that the consumer is facing. And increasingly we are talking about interoperable open systems, which means there is more choice to the consumer, there's more competition, and there is very little friction in moving from one provider to the other. So there is definitely going to be more and more power to the consumer, which means that the consumer behavior, consumer choices, and consumer preference is really going to determine the shape and form of what you offer.
I would just say from our experience, it's how many downloads are they offering, and further, where's the deposit? So I think that's the easiest way the consumer influences a lot of this.
I think if you look at, we are living in the age of fractional ownership.
That's right.
So if you look at fractional ownership and the gig economy and you put the millennials along with that, I think you're already seeing changes happen to the way, financial products are being delivered, which are in bite-sized pieces at the point that you need them, and through a device that is close to you. So I think consumers are already, very much shaping fintech and finance.
Another thing that may empower consumers, and I'm not sure this will happen, but I hope it'll happen, is that we are getting more transparency also for consumers and more simplicity. It's not only choice and so on. It's also, one of the biggest problems consumers have is that the financial products are complicated. People don't understand them, or they don't manage their own habits well enough and remember to manage their budget and so on. All of that is being worked on by innovators, and we might get to a marketplace where people have to compete on trustability because the consumer will be able to tell if you're not being trustworthy, if you're trying to sneak a fee past them or whatever. We'll see.
Well, and we certainly see this at the identity level with some of the credit scoring solutions we're seeing in China and elsewhere. So yes, this will have impact elsewhere. One last question. So let's see, I'll choose between the two. So in terms of best practice, how do you think the banks can reduce the dependence on large legacy systems while moving on to new technologies without compromising the consumer experience?
With great difficulty.
Yeah, I'd say build across the street, maybe.
So I also don't know, because really the way the banks are using us, they're improving the process greatly, speeding up what they're doing 50, 60 times. It's all, but there's still legacy systems in the background. So we're not the solution that replaces the legacy system. And I think that if we were creating a solution like this, we would have to get lots more funding up front, just to be able to go through a much harder process and build something much bigger and much more complex. So a lot of things would have to come through for a startup like us to be able to come in and say, oh, we just built in our basement, a new core banking product, and to walk into Citibank is why wouldn't you buy ours now? You have yours for 60 years. It's about time. It can't be done with a 1 or 2 million of seed funding, or a 4 or 5 million or Series A funding. It would require much higher investment before you actually can see the result. So I think, and this is one of just things that came to my mind, that I wouldn't be able to build this in time before I would run out of money. Sure. But there probably will be more and more things in this big puzzle.
I think this is like, changing the tire while the car is still moving. And that's a reality. I think the banks would need to figure out how you need to kind of continuously, replace old with the new, and at the front continue to offer a better experience.
But we do have the cloud now. That's part of the answer.
Well, I've been able to have the pleasure of working with about 40 financial institutions. So my one last parting gift would be, it starts with the culture. So internally, this is a very important point at the very top. If you're going to take on this concept of iterative change, it starts at the top. So please help me in thanking my panelists today.